following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak, your intent will manifest through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials down 110. Nasdaq is up 17. NDX 100's up 17. S&P's flat. You got to love it, folks. Volatility, two-way market in spades out here. Gold contract down $10.90, trading at $13.2430. Silver down 28 cents, $16.42. Let's jump right into that gold contract. We take a look at gold. What you're going to see out here, gold got to a price point today of $13.42. You've done 2.9. Let's see, GCJ, 291,000 contracts. Great contract volume. So watch what we have here. You went higher. Got higher than yesterday. You have the volume behind it. You're giving it up on price. What that sets up, folks, you're going to be right back topside once again. Bottom line, we'll break it down. Intraday, what you have out here is this. You had the first leg down at 10:30 this morning. Gets down, hits the low, 13.24. You get another nice bounce up to the 120 time frame. You come down. You've already tested the swing low intraday. And that test right now, let me get this closer here. I believe that test intraday was on lighter volume also. Yeah, it was. So your first leg down, you did 11,000 contracts, 11,200. You tested that with 1906. So bottom line, 11,000 to 1,900. Guess what? You're going topside. Let's go take a look at the silver contract. Silver got hit. Silver finally got a bid yesterday. Bottom line, it gives it right back in about 2 seconds today. We take a look at this silver contract. Silver's down 1.8%. You're down 30 cents. Silver out here, 89,000 contracts. So that's going to have contract volume too. I think we did 90-something yesterday. Yeah, we did 99,000 contracts yesterday. That also is pushing into the swing point. You have an expansion of volume. You have given it up on price, but when you see that happen, most times you're going right back topside again. We take a look at this. We put this on a 10-minute and see how we came down. This also, the first leg down at 11:20 this morning. That's when we got the 16.45. You did 3,900 contracts. We just tested that at 14.40 at 646. That's what you're looking for. Bottom line, both of them, I suspect, for the end of today, guess what? You can see the lows of today. Notes and bonds. Let's go to the note and bond market. So what do we have with the note market? Note market out here is flat, 10-year note. You've done 1.5 million contracts. You got to a price point today of 120.14. You're at 120 even. You're still building cars here. That's the bottom line. You know, we've been kind of laying out at this area since the February 14th time frame. What we have is that on March 1st, you had wide price spread. You had the volume. The 10-year had gone from 120 to 120.23. 2.6 million shares. You're backing down, lighter volume. Let's say it wants higher price. We're going to take a look at the 30-year. 30-year is going to be set up the same way. What we have with the 30-year out here, 30-year is trading at a price point of 143.02. Bottom line, 30-year got to 144 today. We've done 291,000 contracts. This hasn't, well, this actually has tested the highs of that 144. You're still backing down, dramatically lighter volume. What you're backing into 464,000 contracts and 294, and right now you're at 291. King dollar. Let's take a look at King dollar. What do we have for King dollar? Now, bottom line, King dollar, it's flat. 89,590. What you have with King dollar out here, we got down to 89,330. It can't get out of its own way. King dollar had rejected higher price last week on the 1st. You had got over the swing point of 90.450, closed underneath it, barreling down. King dollar wants to go test the 88,150. 88,150 is the last swing low of February 16th. That's on the shorter time frame. On the larger time frame, what I expect you're going to see is you're going to see that thing blow it away. Why? Because we're in a very large ABC structure on the way down. Bitcoin, what do we have with Bitcoin? Bitcoin's taking a beating out here today. Bitcoin is down $977. All year, let's see, it's about 9%. We take a look at Bitcoin. What you're going to see is that the last swing point out down here was 9,321. We hit 9,416. There's a lot of different things happening with Bitcoin simultaneously. The SEC is saying the exchanges have to be registered as exchanges, and that's a big number, man. There's no doubt about that. A lot of different stories. What you also have is that the trustee from Mt. Gox, okay, this is a big number, because what you have here is that, yeah, here it is here, the Tokyo Whale. When Mt. Gox had gotten bankrupt, bottom line, you have a trustee. I came out this morning that the trustee has been selling. He's got, I believe, 2,000 Bitcoins left. It was, no, 200,000 Bitcoins. They had lost 850,000 Bitcoins. The company had recovered 200,000 Bitcoins. Bottom line, he's the trustee for the creditors. And guess what? He's been selling them at the average price of $10,105. That, I suspect, had put some pressure on Bitcoin before the SEC come out saying that they wanted the exchanges to be registered as exchanges. So that's a whole different ball game. And the bottom line, we'll see how that whole thing shakes out. What I do expect you're going to see, you know, the Bitcoin market in the United States, folks, is nothing like it is in Asia. So when Asia, well, they can be trading it right now, too. But when Asia really gets up and going, bottom line, you're going to see, I suspect, more downward pressure inside this market out here today. If we take a look at the other cryptocurrencies, you get Ripple is down 11.5%. That's trading at 83 cents. You get Ethereum down 9.5% at 741, and you get Litecoin down 8.8% at 181. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now down 97. NASDAQ is up 16. S&Ps are down 1. Coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down $1.09. You get $109. You get the S&P's up, down 2. NASDAQ is off 12. Let's go inside the Dow Industrials. We'll see the strength versus the weakness out here. So number-wise out here, strength is the IBM. IBM's putting 16 positive points. 3M's putting 9. United Health is putting 6. Taken away from it, Home Depot, a negative 18 points. Travelers, negative 18. ExxonMobil, negative 17, Caterpillar, negative 14. If we go over to the ExxonMobil, what you're going to see out here, Exxon came out with their numbers today. They're selling that baby down, and, you know, we've been talking about Exxon and Chevron. Bottom line, they sold this baby down good. So you had a high-volume swing low, $73.90. You're at $73.69. Guess what? You're going to have volume behind the move once again. We're at 20 million. The high volume low was 29 million. That's on the daily. On the weekly, the setup is a lot worse. On the weekly, what's sticking out like a sore thumb is going back to the high volume low of $66. Now, you're already in the bar also. The top of the bar of the $66 August of 2015 was 75. The bottom is 66. That's where that baby wants to go. Let's go take a look at Chevron. We get to take a look at Chevron. Chevron right now, flat out here. Let's see when they come out with numbers. Let's see what Chevron's saying. Okay, they come out the 27th of April. So that's a lot later. And let's just see what Exxon actually said out here today, how they got twisted around. So, okay, let's see. Okay. What they did is this is interesting. Let me pull this up. They might have not even, they come out with an update. That's what happened here. Yeah, they only come out with an update. Man, they didn't like that update. That's what Chevron just came out with. I mean, Exxon just came out with an update of what they're pumping out of different expansion levels, folks. Bottom line is that they don't like what is going. Oh, I see. Yeah, they come out with an update. They see earnings rising 31 billion by, oh yeah, sure, by 2025. That's telling people a lot. They see production growing by 5 million under the plan. They get a new plan. They need a new plan. Evidently, the market doesn't like their new plan. Now, let's go over to the actual oil market. So, oil out here today, nice and volatile. We come out with the EIA numbers this morning. Bottom line, if we take a look at this on a intraday basis, what you're going to see, first oil, 10:30 in the mornings when oil comes out. Bottom line, oil spikes up to, well, oil had been trading at 10:30 at approximately 61.80. It spiked up to 62.58 and then gave it up in spades. That thing come barreling down. And now what you have is that you're going to see, if we take a look at this, you're going to see yesterday what you're doing is this. So the consolidation, the top of the consolidation is 64.24. We had come down on the 28th of February with 768,000 barrel contracts. We had come down on the March 1st with 813. You went up yesterday with 635. Bottom line, what are you doing? You failed on price, failed on volume yesterday, dramatically. What do we do today? Downtown, wide price spread, got the volume. This baby's going to stop making its way down to 57.90. Let's go over to the XLE. And my point is that Exxon, as well as Chevron, has been dictating that these oil prices are going lower. They've held them up for quite a while. But when you look at the XLE, when you look at Chevron, and when we brought this back to 2014, what was intriguing is that the stocks only gave about a 2-week lead time. This time, the stocks have been down for quite some time. So we'll see how this shakes out. Bottom line, the XLE, you're at $66.85, $60.78 is game, as well as the bottom of this high volume swing, which is $49.53. So you're talking about big numbers out here. If we take a look at some of the higher volume stocks out here today, you have, let's see, Advanced Micro's up 43 cents. We have Twitter up 96 cents. Exxon's down. Dollar Tree. Dollar Tree is getting slammed, man. That thing is down $15, and it's not like they missed their numbers by a huge amount, but market is severely giving them a beating out here. Down $15.12. You're at $89.21. Bottom line, that looks like to me that your next leg down there is somewhere about $65. Autodesk, now this is just the opposite. Autodesk went topside big time, up $16. We take a look at this, put this on a, and the Autodesk is actually taken out. It's 131.610 high. Let's go take a look at Amazon. So we were talking about Amazon yesterday. Amazon right now is up $2.91. That is trading at $15.40. And what you had happen yesterday is that the Pentagon folks is bottom line putting out bids for cloud servers. Now the Amazon has already got the CIA contract. I believe they got that a couple years ago. What had happened yesterday is that you had Microsoft, you had Oracle complaining that a company that Amazon has, they got 900, I think it was 900 million. They got that back down to 65 million. Well, guess what? Bottom line is that the Pentagon came out today, and now it's going to be a winner take all. And the Pentagon opened a winner take all competition last night for a multi-billion-dollar cloud services contract, a move that industry rivals Oracle, Microsoft, said is going to favor Amazon. They're scared of Amazon. That's the bottom line. The thing that's amazing out here, you should hear some of these quotes. It's like amazing. Between Oracle, Microsoft, and IBM, it's just over the top, man. Bottom line, Oracle has a lot to lose. One of the main reasons, I was looking at the chart, and it's not in the chart yet, but Oracle has a lot to lose because what you have here with the cloud and the Amazon, Oracle, as well as IBM, they're huge government contractors. And the bottom line, guess what? You're using their software. Well, guess what? We'll see if that changes in the future. And well, first off, what would happen is that Amazon would have to get the contract. But bottom line, they start beefing about it, and now they get what they want. And the way the Pentagon is looking at it, they want a one vendor. That's what it comes down to. We go take a look at, so let's go look at IBM. IBM out here is one of the positive stocks inside the Dow Industrials. You're up, and you're up with light volume. So let's see what is saying about IBM. Yeah, not much. No, there's not much out there about IBM. So bottom line, they're just pushing IBM up. Home Depot, let's go look at Home Depot. Home Depot is the largest, putting the largest negative inside the Dow Industrials today. So Home Depot is back testing its low of the February 6th time frame. 175.42 is the number. Right now you have, it came down to 176. You're down there with a lot lighter volume. So bottom line is that that's what you can expect the whole market to do, by the way, folks, okay? This market, I suspect, number one, NDX 100, NASDAQ want to test their highs. After we get that test, guess what? Look out below. And what's so deviant about this market, it's come back so many times that people are just going to get used to it. Stay right there. Coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down 91. S&Ps are flat. NASDAQ is up 18. Let's go take a look at the GDX out here. So the GDX is the market vectors ETF, folks. Bottom line, you're down 43 cents. You go top side yesterday with 53 million. You pull back with 20, and it's a beautiful thing. Why? Because you're going into 59. So you're at $21.58. If you're a bull inside the gold market for equity, what you'd love to see is you close over 2164, and you're right now we're 6 cents underneath it. And what that is, the cool thing is that it didn't dig into that bar that much, but that would be a test of the high of the low that had tested the high volume low of February 9th. And you get that, guess what? You're still in good shape. Let's go take a look at the SLV. We'll take a look at the actual ETF for silver. Same setup, which is pretty cool. So you go up 25 cents yesterday. No, I'm sorry, you go to 15.90 yesterday. You do 11.5 million. You back down today with 7 million. That 7 million is going into 10.5. What you'd like to see with the SLV is close at $15.60. So the high of that low is $15.60. That's how that baby is shaking out. We go take a look at the TLT. So notes and bonds have been trying to get off this low, off this bottom. The TLT, bottom line, you're backing down with dramatically lighter volume. We're going into 12.5 million shares, and you've done 3.6. Bottom line, we did get a sign of strength. First time we got a sign of strength inside the note bond market was on the 1st of March. That's where we went up to 119.62. If we go take a look at the rate structure right now, what you're going to see is the 10-year is at 2.884. The high for the year is 2.950. So bottom line is that we'll see if, in fact, the notes and bonds can get a bid inside it. I do expect you're going to get it, but I don't expect you're going to get that bid until we see that NDX 100 go up and test the high. So let's go over to the NDX right now and take a look at it. So the NQs today, we had a low of the NQs of 68.27. Right now, we're at 69.56. You're up 22 bucks. Bottom line is that you are higher versus last night. And guess what? These babies, this thing just wants into that high, which is the 7,072. Now, we get Thursday and Friday. That's how this thing is kind of shaken out. So we'll see where it goes. My take is that we're going to have the NDX 100. Let's pull up the composite now. We look at the composite. So composite right now is up 25 bucks. You're at 73.97. I expect that's going to go after that 75.05. So the low of the high. Now, this is going to be really cool because we only got Thursday and Friday left. The low of the high is 7,431. And you can see we're only 44 points away from that. You know, so most times when you get 2 days, you're only 44 points away from it. That's why I'm saying it wants to spike that high. That's what I suspect we're going to have. That being said, I don't see the S&P basically getting there. What's given us the confirmation out here today is that it wants to go there is that the small cap. The small cap just got above its 27th high. That 27th high on the IWM is 155.88. We did 18 million shares. We are already at 17.7. We're going to do more than that. So what you have there is that that's going to take that swing out. You have a volume taking a swing out. Now, it's not an ABC up because the definition of an ABC up would be you go up one volume, you pull back with light volume, then you go up and take the swing point out with volume. In this particular case, we didn't do that. We went up with light volume from February 9th through February 27th. You came down with volume expanding, and now we are taking a swing point out, but you're still going up with dramatically lighter volume. That being said, I suspect the small caps also are going to tag that high, which is 160.625, 627. And if we go over to the S&P and just look at it again, what I expect on the S&P is it's just going to be a retest of the 278.92. So it's going to be kind of wild watching. Let's go to the Dow Industrials and take a look at the Dow. So Dow, yeah, see the Dow's weak too, man. So the Dow Industrials right now, you're down 74 bucks. You might as well be a flat market out here, though, realistically. And I suspect as we come into the close, they'll maybe we're down 36 bucks or something, or flat. Dow Industrials, you know, 25,800 would be the number. Now, that's 1,000 points, but yeah, we'll see if we can do it. You know, bottom line, volatility is out here, and what I do expect you're going to see is that that's not going to change. Let's go take a look at Apple inside the NDX 100. Apple laying under its highs. Now, Apple's got 4 separate tops, man. This is going to be pretty wild watching how Apple shakes out, because what you have is this. You have 4 separate tops, and then you get this monster high volume low down there at 150. Because you're talking about, that's $25 down. My take, we're going to go after it. You put this on the weekly, and what you're going to see at the setup is pretty clean. I mean, that's one beautiful spike on the way down. What you did do last week is that you had some juice on the way up. So that wants to be tested, meaning the high bar does want to be tested, and we'll see how that shakes out. But looks to me like once it's tested, see ya, don't want to be ya. Netflix, NFLX, this thing has been on fire. Let's go take a look at Netflix. Netflix is down $3 today. This is after being up some big numbers. Oh, look at that, too. It backed down. Amazing. So Netflix the last 3 days went from $283 up to $325. This is backing down with light volume. This still wants higher price, man. You know, let's see. When do they come out with numbers? The 16th of April, those numbers are coming out. So that's we get some time on Netflix, no doubt. Let's go take a look at the XAU, the HUI. XAU out here trading down $1.94. You're at $78.84. Now, I won't get the volume till 8 o'clock tonight, but what I do want to see is that how did we went higher yesterday. So we went higher yesterday with 30 million shares. You're going into 32. Not bad. Not great, but not bad. I suspect we're going to be pulling back with a lot light of shares today. The reason being, I'll bring up a couple of the gold stocks, and you'll see that are inside the XAU, and you'll see that the volume is contracting in all of them. Gold Bugs Index, that's down $4.82. Now, this one here, oh, this is going to be serious business. Let me look at this. The reason the Gold Bugs Index is serious business is the Gold Bugs Index has to hold. It took the Gold Bugs Index a couple days to get above the range again. Oh, look at this. Okay, this is a little dangerous. This is what it is. So the Gold Bugs Index, and I'm not using the low here. The low is 173.71, but we're still below that anyway, 173.17. What I'm using for this benchmark is the low of December 13th. The reason being is that that's where we had wide price spread. That's where we had the volume. That got above it yesterday. We want to see this close above it, which is 174.97. That's not going to happen today. Right now, you're at 173.23, so we have divergence there. Stay right there, folks. Coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So Dow right now is down 53. NASDAQ is up 28. S&Ps are up 4. And you like volatility, like a two-way market, folks? We have it, and we have it in spades. I don't think that's going to change either. So the Fed Beige Book came out at 2 o'clock this afternoon. Let's see what they have to say. Okay, so tight U.S. labor market was lifting all wages across most of the country through late February, contributing to, quote, moderate inflation in most areas, the Federal Reserve survey showed. Across the country, contacts observed persistent labor market tightness and brisk demand for qualified workers, as well as increased activity at staffing placement services. Most districts saw employees raise wages and expand benefit packages in response to the tight labor market. Price increased in all districts, the survey stated, and most of the reports noted moderate inflation. The previous Beige Book, which was released on January 17th, noted that most districts reported modest to moderate price growth. The report, let's see, one of the Fed's more dovish policymakers, Atlanta Fed Raphael Bostek, said earlier Wednesday he had upgraded his own projection to 3 hikes this year from 2. So that's a big number. Let's see what else we got in here. Unemployment remained at 4.1% in January for the 4th straight month, the lowest level since 2000. Wages, however, haven't risen as much as expected in response. Year-over-year gains in hourly earnings rose by an average of 2.4% in the 4 most recent quarterly reports. So bottom line is that, you take a look at that report, and it's saying that what does happen, the whole deal in inflation, folks, is that if inflation gets into wages, that's where you're going to really get an expansion of inflation. That's when it comes down to it. Because you got to remember something, that, wages have to be paid on a continual basis. We all have choices about what do we want to eat, what do we want to do. Those other things that are inside their CPI. You get them inside wages, bottom line, that's when you're going to see some jolting out here. Thus far, when I look at the bond market, this thing still doesn't want to move higher. We came down for, bottom line, 13 weeks now. Well, we've gone sideways for 3 weeks. We went down flat out 10 weeks the whole way. I'll show you what's holding this market up, actually, because it's the same with the dollar, meaning what's holding it up. So if we do the continuous contract inside the Treasury, I'm going to do the 30-year continuous. What you're going to see, put this back, line this up. Where we're at is this. You're at when we broke topside in 2011, bottom line, we start out at 136, you get to 147. The highs of August of the 141, the highs of December of 08, 143. You know, you have a lot of trading in here. When we took off topside again, one of the biggest numbers happens to be March of 2015. That's when that's when the rates went down dramatically. And that number there is 142.11. You know, so there's a lot holding it up. And, you know, we'll see what bottom line, and we're going to see that pretty quickly. But what I expect, as I said a little bit earlier, that what I think we're going to have is that as this market goes out and tests, it comes back, that's when you're going to see people bail right into bonds once again. It's pretty impressive watching this market, though, go from a big red to a good green. If we go take a look at this and we see the price spread out here today inside the E-minis, the low is 26.81, and right now you're at 27.29. So big price spread. Dow Industrial, same type of setup. The Dow looks like it wants to crawl back to that green area, and that'd be quite a feat for the Dow Industrials. Because what you didn't see the futures, but the bottom line, the futures were almost down 500 last night, about 7:30 at night. They were down like 300 this morning, and right now you're dealing with the Dow that's down $43. If we take a look at this, what you're going to see. Now watch this. This is going to be bizarre, but bottom line, this is what you have. You're going to have a Dow Industrial. See, I'll do the diamonds so you can see the correlation. You're going to have the diamonds. They're going against 6.3 million. They're going against 8 million, and you only did 4.8. So what you have here, you pull back, has lighter volume. Guess what? It's going to go higher. And can't bust them down, it's going to try to bust them up. I expect as we go up, you're going to see the volume contract once again. So it's pretty cool when you start seeing this volatility and how fast things can move back and forth. Inside the Qs, now this is where it's going to get really interesting. Inside the Qs is this. You also came back with lighter volume. That being said, if you're paying attention to candlestick charting, this is setting up a last engulfing. Now, these are really dangerous because what ends up happening is this. They look like they're bullish, and they're bearish. What happens is that you start lower, you finish higher, and if this is at a low, that would be bullish. At a high, they're bearish. So I do expect they're still going to go up to that high, but that's a big heads up when you start combining the volume characteristic with the aspect of candlestick charting. And Nasdaq Composite, same setup, man. Same setup. You're going to have it, we were lower, no doubt. We were down at 73.11. You're at 74.02. That's impressive, big time. Bottom line, these markets are game for the highs out here. We take a look at a few of those steel stocks out here. Evidently, Trump's going to sign this thing, tariff tomorrow morning at 11 o'clock. Bottom line, steel wants higher price. U.S. Steel's up $1.29, and bring this back. What you're going to see, this has been a consolidation for a long period of time. You start pushing last month with volume. We were pushing $46. Your swing point out here is $46.55. Bottom line, I expect it's going to get taken out. Now, the thing is pretty wild. If it gets taken out, you're talking about a swing high out here of $64, and you're only at $45. We take a look at Nucor. Nucor, you know, to me is the strongest stock there is out, the strongest steel stock. There's only 3 of them. Bottom line, you know, it's only a $50 billion industry. Nucor, bottom line, that also wants higher price. Now with Nucor, you're at 69. I expect that thing's going to go after its swing high of 82. That's the way that seems to be setting up. Now that's one side of it. We go to General Motors on the other side of it, and bottom line is that they can't get out of their way. That's going to you know, car prices, steel, 1,000 pounds of steel and cars probably will go up. What it looks like they're setting up also is that more than likely our 2 biggest trading partners, meaning Canada and Mexico. We import more steel from Canada, but they actually have a deficit with us of $2 billion because we import it, we do the manufacturing, we send it back to them. It looks like they're going to be exempt from the deal. We'll find out where that shakes out. Bottom line, steel companies want higher price. Bottom line, automobile companies in the U.S. want lower price. Ford out here today, flat, $10.68. Ford looks like it's going to be making its way down to that 755 number. You stay right there, folks. We're coming right back. We have the Dow Industrials right now down 67. NASDAQ is up 26. S&Ps are up 3.5. Gold's down $10. Silver's off 28 cents. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Bazan is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 88. You get the NASDAQ up 21. S&Ps are up 1.5. And let's go inside that NDX, and we'll see where that strength is. So the strength inside the NDX today, Autodesk was up 14.5%, folks. Big number. You had JD.com up 2.9%. You get Align Technology up 2.6%, and Expedia up 2.5%. Taken away from it, Dollar Tree was the big hit out here today inside the NDX 100. That was down 14.6%, or $15.24. Ross Stores was also down big, down 6%, trading down $4.91 at $75.60. Mondelez was down 4%, trading out at down $1.99 at $43.58. Let's go look at that. Okay, so that's a gap lower. This is a setup too. You'll see this is what you're going to see out here, little by little, sector by sector, stock by stock. You're going to see them going down, testing out the February 9th swing lows. And the more that you see, the higher the probability is that after we get up into these highs, that's where we're going. The DAX in Germany, this has been giving us a huge amount of information. DAX in Germany out here today was up 131 bucks. Now let's see if I get the volume in. I don't think I get this volume to 8 o'clock tonight. Let's just see. No, I don't have it yet. But I expect you're going to see that up with light volume, and that's probably going to get up into the swing point of 12,601. That being said, the DAX in Germany, as well as the FTSE in the UK, has had a tough time holding price. They haven't had the type of counter trend bounce that we had in the US. The FTSE was up 11 bucks today. I expect that baby's going to get up till 73.26, which is also the swing high of the 27th. And that's what you want to be putting together, because they're always open before us. If that's what we get, meaning they get up to those price points, they fail on price at those price points. You're already going to know what the volume is as they're going up there. Guess what? That's going to give us a heads up after this NDX 100 test this high. You stay right there, folks. Come back with a few numbers after the close out here today. Dow Industrials right now up, Dow up. No, Dow down 78. NASDAQ up 22. S&P's up 2. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Your truth is personal to you. Your own opinions and point of view reflect your own agreements and are personal to you. It's no one's truth but yours. A lot of truth to that, man. Market-wise, let's take a look at it out here. We had the Dow Industrials down 82, NASDAQ up 24, S&P's down 1. All the indices, folks, wide price spread, good volume, light volume, actually. If we go take a look at this S&P, what you're going to see is that you got a rejection of lower price. You had lighter volume. We did 79 million shares in the SPY today. You're going against 97 million. Bottom line, the SPY still wants to go test out the 27th of February, which is 278.92. You got two more days in the week. I suspect we're going to get that test. IWM, with the IWM, the small caps, so the small caps did out here today. It took out its swing point. You had volume as it took out the swing point. It isn't a ABC structure on the way up. The reason being is the definition of an ABC structure on the way up would be you go up with volume, you're down with light volume, and then you take a swing out with volume. In the small caps case, if we take a look at the lows from February 9th, you went up with light volume. Then from the 27th down to the March 1st, you went down with big volume. Bottom line, though, took it out with volume. That's going to set up a test for the small caps also of the 160.65, which is the highs of the 24th. NDX 100. Now, NDX 100 Qs as well as the composite. I expect what you're going to see, number one, is that you're going to test this high. Right now, the Qs are at 168.93. The high we're talking about is on the 26th of January, 170.95. And more than likely what you're going to get is this. This is what I'd love to see, actually. A spike of the high. And what does a spike of the high mean? Well, what happens with a spike of the high is this. You go into the high, intraday, you go past that high, you spike it good. And spiking it good would be saying that you go up about 1.5 points intraday, and then you just give it up. And bottom line, that's what you get. That's what I expect we're going to get, too, by the way. We're either going to get a test or you're going to get a spike. The difference in a test and a spike goes like this. If you get the spike, two different things end up happening in my own head. Now, either way, we're going to test the high volume low February 9th. If you get the spike, it's going to be a much larger correction, because what happens with a spike is that the market itself is looking, how many more buys? How many more buys do we have up? How many more buys? They let them buy, and then the large operator is going to go into that buying area. He's going to take every one of those buys, and that's going to be their short position for the way down. We take a look at the composite. Composite set up the exact same way as the NDX 100. Composite was up 24 bucks today. The high that we're talking about, we're going to expect to get tested, is 75.05. So we're 109 points away from that. You're up 24 bucks today. We'll see how the rest of it shakes out. Gold contract. What do we have with the gold contract? You can expect that volatility to continue in the gold market also. Now, the differential inside the gold market today to the dollar is pretty substantial. And what I mean specifically is this. Gold traded from 1342 high to 1323 low. Now, we had volume. We had 296,000 contracts. So that's we went to a higher high. That's telling me we do want to go higher. We look at this intraday, and intraday, what it had already done, the first leg down at 11:30 in the morning, that got tested with lighter volume. That's telling me that we want higher price, okay? That being said, let's go right over to the dollar. And what you're going to see is that the dollar didn't hold higher price, and it's like, okay, so they sold gold off good when the dollar's still lower. That's the divergence in the marketplace. And bottom line, when we take a look at the dollar's trading out at 89.140. That's saying to me it wants to go to 87.830. That's on the smaller time basis. On the larger time basis, it certainly looks like we are going to go down. We have a confirmed ABC structure on the way down with a price projection of 82.340. Notes and bonds, bottom line, they continue to need a bid. We had the 10-year note market flat out here today. We had a low of 119.31, high of 120.14. This has been trying to basically get a low going since the 14th of February. What we did have is that on the 1st of March, you had that sign of strength. And if we take a look at this today, what you're going to see is that we did 1.6 million contracts. That was trading back into the 2.3 million contracts and 2.6. So the bottom line is that when we do take a look at that, that went higher on the first with volume, back down with lighter volume. Some of the higher volume stocks we had out here today, and this was a low volume market, is that you had Advanced Micro up 48 cents. You had Apple down 164. Dollar Tree is the one that took the beating out here today. That was down $15.11. They come out with the numbers. Market didn't like the numbers. They weren't that bad. But bottom line is that there's something in there that the market just can't stand. Autodesk is just the opposite. Autodesk came out with numbers. Market liked it big time. Autodesk was up $17.83 at 137. And inside the NDX 100, that's what drove that NDX 100 up big. That was up 14.8%. You had JD.com up 2.9%. Align Technology was up 2.7%. Expedia was up 2.7%. So there was plenty of juice inside of that market. We take a look at the GDX out here. So GDX out here, what the GDX did out here today, we backed down 44 cents. 40 million shares traded. Guess what? That's all right. Nothing wrong with that. Why? We went topside yesterday with 53 million shares. You're backing into 59 million shares. What I would have liked to see inside the GDX, though, is that the high of the low is $21.64. We closed at 21.57. You want to see that close above the 21.64 area. That would be high of the low. You stay right there, folks. We'll be coming back with a few numbers. Got a few stragglers coming in with earnings. Dow Industrials finished down 82, NASDAQ up 24, S&P's flat. We're coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 82. You had the NASDAQ up 24. S&P's flat. Bitcoin took a hit out here. That we take a look at XBT. In fact, we take a look at all these cryptocurrencies. Bitcoin right now is trading down $957, 98.33. This went out here today. Well, right now it's down 8.8%. You have Ripple down 10.2. We have Ethereum down 9.4, and Litecoin is down 8.7. What this was all about, this is about a couple different things. I suspect one of the biggest ones, though, here, well, let's take a look at technically first. So technically, your lowest swing point is 93.21, and what's dangerous for Bitcoin is that it didn't get there. You got to 94.16. I expect what you're going to see out here tonight when Asia does open. That's when Asia gets active, actually, because Bitcoin trades 24 hours a day. Bottom line, I expect you're going to see some big action down there and we'll find out just what kind of selling there is. So what is it all about? Well, you had two different things. You had the trustee from Mount Cox, which had gone bankrupt 4 years ago. What's going on there is that the trustee has been selling Bitcoins, getting the creditors' money back. Okay, so what you had there, flat out, is you have selling pressure. It was announced this morning. He actually announced that the Tokyo attorney that's in it that he was getting an average price of a 10,000. Let's see, 10,105 for the coins. What's intriguing about this, folks, is this. When you read this article, is that this company had 850,000 Bitcoins stolen from them. That's this story is, and 4 years ago. At that point, that was worth $500 million. They recovered 200,000 of those coins. This trustee is selling these off in order to, bottom line, pay the creditors. Well, when you take Bitcoin back, Tommy and I this morning on the 10 o'clock show, we were taking a look at this. And watch this. This is like incredible when you actually look at this, because when you take this back 4 years, well, bottom line is that Bitcoin was trading at like, $300 or $400. So you can see that the real question would be like, okay, you're getting 10,000, you only have 25% of your Bitcoins, but guess what? That is, when you start putting those numbers together, those creditors, someone's going to make more money than they had 4 years ago at that, of course, at that price point. So that was the first part that I saw pressure coming in Bitcoin, period, because of everyone knew what the price was that the trustee was happy with, okay? Then intraday out here, so we take a look at this intraday, what you're going to see is this. So intraday, this is the beginning of the day, starting at 11 o'clock, the SEC come out, and this is where they put the kibosh on this thing in a very fast way. And what the SEC is saying, let's see what they have to say. So the SEC is talking about Bitcoin crypto platforms must be registered, okay? So what does that mean? Well, let's go take a look at it. So if a platform offers trading of digital assets that are securities and operates as an exchange as defined by the federal security laws, then the platform must register with the SEC as a national security exchange or be exempt from registration, the SEC said in a statement. What's intriguing about that statement is this is where I think the regulators are still having a hard time figuring what is the definition. Because let me just go over that again. So if a platform offers trading of digital assets that are securities, and operates as an exchange. So it's almost like they're asking a question, that are securities. Well, is a Bitcoin a security? I don't think anyone knows yet. Bottom line, though, fighting with the SEC is a losing battle. Some of the largest cryptocurrency trading platforms like Coinbase, and GDAX. Coinbase and GDAX are the biggest crypto exchanges, are not registered as an exchange with the SEC, and instead have money transmission licenses with separate states. In the case of Gemini, it's regulated by the New York State Department of Financial Services as a trust company. Temple LLC is an affiliate to Liquid M Capital, which is registered as an alternative trading system with the SEC. I've never heard of that one. That one might have the best chance out there. Now, Overstock.com T0 says it's going to aim to be fully compliant, to be a fully compliant trading system. What's going on with Overstock, with the guy that runs Overstock, OSTK. Let me just see who this is. I should know this guy's name, because this is the guy who's having a battle with short sellers forever. I just remember this. Oh, that Byrne, that's right. Patrick Byrne. So bottom line, he plans on having a exchange, and he is saying that he's going to be fully compliant. And that's, bottom line, you go through the work, you can be fully compliant. Where they're going to, let me finish this, because I'll show you where they're going to have a hard time. It's going to be the knowing your customer that's going to be the hardest time in having any type of exchange at all. So here's a quote by the SEC. Many platforms are referring to themselves as exchanges, which can give the misimpression to investors that they are regulated or meet regulatory standards. of a national security exchange, the SEC said in a statement. The SEC statement was issued by its Trading and Markets Unit in Enforcement Division, which investigates misconduct and fines firms for violating security rules. The Enforcement Division's involvement shows potential pitfalls for the digital coin platforms that don't heed the SEC warning to register with the agency. Exchanges that register with the agency have a high compliance burden, including the subjects being open to inspections. They also require to police their markets and follow SEC rules designed to ensure fair trading. It's not even the fair trading. What you're going to get down to, folks, is knowing your customer. And the way that the cryptocurrency world works is that, guess what? How do you know your customer? Because they don't, I'm not saying that cryptocurrencies don't want to know who the customer is, but the bottom line is that it is an anonymous system. So what I expect you're going to see when all's said and done here. So two different things are happening. If you have less exchanges and you don't have any exchanges in the United States, because they'll wipe them out, then there's going to be less trading. That's the first part. The second part, however, still opens up crypto, and this is why. And this is why it's going to be intriguing to see what happens in Asia tonight. Because thus far, it is legal in a couple Asian countries in order to have exchanges, period. So the real question is going to be, is that where everything's going to move to? I would say no. The reason being is that this is going to, our Treasury will go after the money laundering aspect of it, because those are some of our trading partners. So you're going to see that. When push comes to shove, more than likely we're going to see these exchanges at places where it's going to be very hard to get to, meaning our SEC or the Justice Department. That being said, guess what? There's so many of these cryptocurrencies that get taken to the cleaners by other hackers. I think they get some problems for a bit here. You stay right there, folks. We'll be coming right back. Let's see, has the Costco just come out with numbers? Costco just closed at 187. That's trading 187.40. They're out with numbers. We'll get to those numbers as soon as we come back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish down 82, NASDAQ up 24, S&P's flat. Let's go take a look at Costco out here. So Costco closed at 187.36. That had been down $4.10. Right now it's down $1. Let's see what they say number-wise out here. Okay, so their earnings per share, the estimate was $1.49. They made $1.59. Good number there. Revenue estimate, $32.75. They made $33. Not bad there. That's on the second quarter. So their comp sales, look at that comp sale, man. What a big number this is. So they were estimated comp sales, folks, were up 8%. They were up 10.5. Huge number. Let's see, their gas sales comp up 8.4%. Man, they beat on everything. There's no two ways about that. But bottom line is that right now, that was still, yeah, they're still down $1. Yeah, so we'll see where the rest of this shakes out. Let me pull this back. Okay, so it pushed down. Well, you know, you get a big consolidation. And that February 9th is still a high volume swing low. February 6th, actually. So that's going to go test it. And you can see intraday out here today. What we did do intraday is that you got lower and you had a expansion of volume. You know, if we go over and we take a look at the market, what you're going to see out here, let's take a look at this S&P. So intraday out here, and this is, you know, we're in a volatile market. You can expect the volatile market to continue. Once you get in a volatility market, folks, bottom line is that, you know, whether it's 3, 4, 5 months, this thing is here. So intraday out here today, what did the S&P do? The S&P made it all the way back from 2686 up to 2728. Now, you can say it's news-driven. You can say it's butt-driven, sell-driven. Last night when Gary Cohn put his resignation in, markets go down big. So what happened, the announcement came out at 5:15 last night. Futures closed at 4:15. They opened back up at 5:45. Bottom line, when they opened back up, down 30 points. They ended up going down 37. They clawed all the way back. And guess what? This is where the aspect of buying the dip, okay, has worked on a continual basis since when? Since 2008, right? What you saw out here again today is the same type of setup, meaning buying the dip, got rewarded. They got rewarded as the, you know, White House turned around intraday out here. You know, first what you had last night. First you had the what day is today? First you had the White House saying that there were going to be absolutely no carve-outs for anyone, any country, in the steel and the aluminum tariff. That changed totally today. What you had out here today, first they pushed Kevin Haslett out. He is the economic advisor chairman. He indicated that the trade policy #1 is not finalized. And then Sarah Sanders came out at the press conference and said that there are potential carve-outs for Canada and Mexico if the U.S. implements stiff tariffs on steel and aluminum. So bottom line, that's what you got. You get the run forward on price, bottom line, what I expect you're going to see out here is that, number one, you know, the S&Ps want to test this at 27.95. Number two, no matter what's going to happen out here, and it's always, once the volatility comes in the marketplace, folks, you don't know what pushes the market around. If you stay with price and volume, you know, most times you're going to be a lot better off because there's going to be a lot of twists and turns out here in a huge way. So you get Thursday and Friday, and what I expect you're going to see out here in both days, no matter what the market's doing, this thing wants to test the highs. We'll see how it tests it. We had a question out here about the gold market, and why is the GDX struggling? A mine is hedging that they can't get going when gold is above 1,300. Okay, so let's take a look at the. Well, first off, the GDX is the Market Vectors Gold Mining Trust. You know, inside of this, what we have is that the #1 weighting structure is Newmont. That's 9.7%. Barrick is 6.4%. Franco-Nevada 6.2%. Newcrest, which is in Australia, 6%. Gold Corp, Wheaton Precious Metals, and Eagle, Randgold, Royal Gold, and then Kenros. So if we take a look at a few of these, right? No, I don't, to answer your question, no, I don't think they're hedging. We take a look at these, and what you're going to see is that Newmont, I'm going to bring this back. So Newmont, you know, bottom line has been in the same consolidation going all the way back to 2016, which is pretty intense. That being said, when you actually take a look at it, you can see that Newmont had its first low, not its first low, but when I'm counting these, that they get higher lows, you can go all the way back to November of 2016. You get a low of $30.19. Your next low is $30.40. Your next low is July of 2017, $31.42. Next one, these are all higher lows. Next one, $34.19, which is December of 2017. And the next one was February, which is $35.98. Now, that being said, that is, bottom line, a market that wants higher price. So that's the largest weighting structure inside the GDX. I expect you're going to see that wants a higher price. Franco-Nevada, FNV. Now, Franco-Nevada is weak. You know, didn't act, today's wasn't bad, but when you take a look at Franco-Nevada, we put this back on 3 years, you know, bottom line is that this thing topped out at 86 bucks December of 2017. You know, I don't mind what, I like what it looks like, but you're still trading the same place you were in April of 2016. So you're going sideways. Franco-Nevada didn't break its swing when it got down to the lows of February, but that low can get tested. We take a look at the Royal Gold. Royal Gold, these, all of them really, weighted-wise, they're all about 7 to 9%. We take a look at Royal Gold, bottom line, same type of setup, meaning we're at 2016. You know, we'll see whether that can get tested. The way that the equities are trading, actually, let's go. I want to go over to one of the South Africa. I want to go over to Harmony. So Harmony pulled back today. Harmony is in an ABC structure on the way up. This broke topside with good volume. So Harmony wants to run up until like 247. And let's go look at Gold Corp, GG. Yeah, see, this is in good shape, too. Gold Corp goes higher yesterday with 9.8, comes down today with 6.5. Bottom line, you know, what I expect you're going to see here is you have more of a consolidation, driving people crazy. There's no two ways about that. The differential inside the gold market today and the dollar was substantial, meaning the dollar couldn't get traction. They sold gold off. My take, you had a higher high today in gold. You had a higher high today in silver. You had the volume. You're going to be right back topside. You stay right there, folks. We'll come right back. Dow finished down 82. NASDAQ up 24. S&P's flat.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And if you are in the Northeast, folks, take your time driving. You guys got a heck of a storm up there. The good news is that, guess what? You get that storm now, but it's going to be 40 degrees coming in tomorrow. So that snow's not going to last too long. You do have about 10 inches coming at you, though, which is a big number. Let's go. I want to show you something inside the Bitcoin market, the cryptocurrencies in general, but Bitcoin in general. So we take a look at Bitcoin, and you're going to see that we had a low out here today, traded at 9,416. That was when the announcement came out that the SEC was basically saying that unless you're an exchange, they don't want you trading Bitcoin. Now, I want to show you something else. So, Bitcoin, okay, so Bitcoin topped out on December 18th. Now, December 18th also happens to be, that was 19,511. December 19th also happens to be the first day that Bitcoin traded at the CME. So when you trade futures, folks, the CME, their contract is only 1 Bitcoin. Now, they traded 8,565 Bitcoins today. That's the most I've seen so far. The CME came out approximately 2.5 weeks later with their contract. Now, their contract is 5 coins per contract, and they traded 1,873. So the bottom line, you can see they almost traded, 9,500 contracts. Now, that was one of the biggest we've seen thus far. Now, this is what I want to show you, though, because if you're into cryptocurrencies, you have to pay attention to our future market, and I'll show you why. So I'm going to put this on a one-day deal, because I saw this happen last Friday, too. So we put this on a one-day deal. We've got to get where our futures markets close, okay? So our future markets close. They close right there. So we closed out. Bitcoin was at 97.62. All right. Yeah, 97.62 to 9,800, okay? You know, thus far, we've gone up $139 from them. And what that is so picture something. The future markets, it's really simple to buy and sell these Bitcoins. If you haven't test drove the Nadex platform, great time to do it. Come on over, hit the banner. You can bring it up. You use the demonstration account so you can see how this works. Because what happens, you can buy and sell a weekly Bitcoin spread on that. They are covering that spread inside the CME and the CBOE. That's how it's a derivative. So bottom line is that that's how that's covered. And that means that the market maker itself is delta neutral. He doesn't care which way it goes as long as it's covered. They're making money on the spread. So on Friday, so the inside our markets, 8 o'clock in the morning to 3 o'clock in the afternoon, 8 o'clock Monday morning to 3 o'clock in the afternoon, that's where that thing is liquid. You can buy it, sell as quick as you want. No problem. As soon as our markets close, this happened on Friday too, you can see the thing was bidding up. And if I show you, watch how it bid up over the weekend. And this is sad for the retail person that's not in the market, because I don't think they realize how powerful the future market is. So if I put this back, I'm going to put this back to Friday. And what you're going to see, this is where we closed. Watch this. We closed at, okay, on Friday, you closed at 10,880, 3 o'clock in the afternoon, right? By 4:30, you were at 11,800. On Monday, this thing was already up to 11,653. And guess what? As soon as our future markets open back up, bottom line, 1 o'clock in the afternoon. So it took like 4 hours. 1 o'clock in the afternoon, you're up there. It doesn't mean that it's always going to go down. My point is that to me, you're at an inflection point right now. But that's where the volumes are coming in. When you're seeing these numbers out here, this is like basically, this number is off the way that Bloomberg is doing it. It's off Coinbase as well as GDEX. That's how I believe they're doing it. They're matching them into seeing, okay, what is that price? Cryptocurrencies are decentralized math-based digital assets in which transactions be from cryptography. The first specification and proof of concept of Bitcoin. Yeah, the bottom line is that that's how I believe they are doing it. So my point is that, yes, when our future markets close, bottom line, there's so many people that are bullish in this that they do bid them up. And here, watch. It wasn't just Bitcoin. I'll show you this. This is pretty cool, man, when you actually look at this. Because I meant Paul from California. You probably are doing well on this already. What you also had is that, so Ripple's down 8.5%. I believe this was down 10%, though. Yeah, same deal. So what you're going to see, as soon as our markets close, not that, yeah, but there it is. Look at that. So we were at, yeah, you were at 83 cents, 986. It's not huge, but it's important to understand. The understanding aspect of it is that if you're going to be trading these things, yeah, if the market is down during the daytime, good. Bottom line, our market closes, you're bullish, yeah, you can buy them then, but tell you what, you better be selling them before our market opens back up. It is a 24-hour market. Now, what also happens is this is what's going to be intriguing tonight in Asia, is that the news, now this is the second time our SEC came out and said, hey, listen, man, you know, we think that Bitcoin is a security. What they did come out today specifically saying is not only we think it's a security, they still saying we think, because if you look at that statement, they're not saying that it is a security. They're saying that they think it's a security, and let me get that statement again, because it's not that they're saying they think it's a security. It is quite of a statement, though. Let's see. Here it is here. If a platform offers trading of digital currencies that are securities and operates as an exchange, as defined by the federal security laws, then the platform must register with the SEC as a national security exchange or be exempt from the registration, the SEC said. You can see that they're actually not saying that it is a security. They are saying if a platform offers trading of digital currencies that are securities. Well, guess what? Bottom line is that, excuse me, is that in this aspect, you know, it's the Wild West. CTFC talking about crypto registration right now. Oh, that's good. Okay, so now this is where there's a battle set up, by the way, between the CTFC and the SEC. So far, the CTFC has won. The reason I'm saying that they won, that's how they got these futures registered. So the bottom line is that we may see the whole crypto deal, and this is my point even looking at the futures. The futures, to me, at this point, are actually going to run Bitcoin. You know, no matter where they want to start pushing Bitcoin. If those futures traders are going to push Bitcoin up, guess what? It's going to happen in the futures market. They want to push it down, it's going to happen in the future market. Why? Because the buying of selling is one split second. You hit one button and you're in and you're out. And guess what? Derivatives basically run markets. That's, some people, you may like it or not like it. It is what it is. Stay right there, folks. Dow finished down 82. NASDAQ up 24. S&P's flat. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2000, 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Okay, so we have a market, bottom line, comes back each and every time that it goes down. We take a look at the S&P. What I expect, the benchmark in the S&P, folks, is the 27th of February. I expect, number one, that thing's going to get hit some way, somewhere. And I'm expecting that, by the way, in the next couple of days. The number that I'm looking at there is 2789. Right now, you're at 2726. The reason that I don't think the S&P is going to go hit the highs is that it has been the weakest indice on both counter-trend bounces, on the counter-trend bounce that we had from February 9th. And bottom line is that it's having a hard time getting up into that point. That being said, your NDX 100, as well as the NASDAQ Composite, look to me like they want to hit the highs. The way they're actually trading, as I said a little bit earlier, I think they're going to spike the highs. The NDX, we're at 69.29. The high is 7,022. That's pretty easy to get to. The composite, same type of setup into the NASDAQ Composite. You're at 73.96, almost 7,400. And that would, it has to get up about another 105 points. You get 2 days for that. Small caps, Russell 2000. That also wants to test the high. The Russell today took out the swing point and had volume behind the move. So we're at 1574 when you actually look at the Russell. That high is 1615. You do the correlation inside the IWM. What you're going to see inside the IWM, IWM was up $1.37 today. You're at 156.74. The high there is 160.62. In all these cases, what you're going to see is that we'll see whether the test is successful or not. I don't think they're going to be. One of the main reasons I don't think they're going to be is that what you are doing is that you are going up into these levels again with dramatically lighter volume. What we did yesterday, went up with lighter volume, couldn't hold. You come back down today with lighter volume. That's important to wrap your head around because that's what's saying, even though you can think that, okay, everything's wild out here, bottom line, these markets are deviant, and they want to test those highs. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Have a blast with it. Look forward to speaking right back here.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.